Hey folks, welcome to Pro Trader Strategies. My name's Eric Wilkinson and this is Spotting the Trade. What I like to do in these videos is build from simple concepts to real life examples, and throughout that I will find opportunities that I'm going to implement into my portfolio based on the assumptions we come up with our technical analysis that I'm going to be trying to filter in here a little bit, sprinkle it in for a little flavor. So if you guys have anything you guys want me to check out, comment over there in the comment section. I will make sure that I'm keeping an eye on that. You guys will be driving this content. And hey, if you get a light bulb moment at any point in time in this video, please smash that like button for me. What that does is it tells these little bots, run out there and find somebody that looks just like you to share this video with. So please smash away for me. All right, let's get on with it. Across the pond, really not a whole lot going on. We did get some construction output numbers out of Great Britain, and they were not very good, folks, coming in at negative 1.8%. It was supposed to be a positive 0.2%, so really a big miss on this construction output out of Great Britain. German final CPI in line with expectations at negative 0.2%. Well, that's a far cry from what we're seeing here in the United States. Our CPI coming in here in the United States at 0.8%. Folks, this is the highest levels we've seen on these consumer price index numbers since like the 80s and 90s. We got the core. You're going to strip out with the core CPI here. We're going to strip out some food and energy. So that gives us a bit of a better gauge as to whether or not transitory inflation is here. All right. Because that's what we're trying to strip out is some of the transitory inflation. That's what with food and energy we'll see fluctuate quite dramatically depending on whether there's a hurricane or a drought. Right. If we have a hurricane, we got commodity prices going through the roof on crude oil and stuff like that. And if we have a drought, we're going to see food prices go through the roof because of the lack of supply there. So core CPI, stripping out that food and energy, brings it in line with what we are expecting at 0.5%. But folks, this is still very hot coming in with this number. We also are going to get University of Michigan consumer sentiment later on today. So keep your eyes out for that. A couple of things here to talk about with these hotter than inflation or hotter than expected inflationary numbers. We are going to see some commodity price pressures here going forward. We're seeing already crude oil start to react to this just a little bit, getting a little bit of a blip to the upside. We are going down there to test that point of control that I was kind of expecting us to at least tag here in the 60s, but with the inflationary worries that could be driving this price higher, believe it or not. Another aspect of this crude oil I mentioned or I touched upon yesterday, the fact that we are seeing real demand coming out of Mexico for our diesel or our refineries. What is that doing to prices here? Well, think about it. If they are shipping basically these byproducts back to Mexico, a lot of these refiners are not necessarily producing some of the other byproducts of crude oil right now. One of those aspects is polypropylene. Polypropylene goes into PVC. And believe it or not, we have a lot of US manufacturers here in the United States that produce that white pipe or that purple pipe or gray pipe that you see, say at Home Depot and stuff like that for your irrigation and or piping in your house anywhere. So not only are we seeing these precious metal type or these commodity prices that are necessarily related to metals and stuff like that go higher, well, we're also seeing all of these other products that go into the home. Not even people are talking about lumber prices, how they went through the roof, but these polypropylene prices have quadrupled, tripled, actually sometimes up to 300-400% in some regards from basically a year ago. So these prices are exploding even on things here in the United States. We're even seeing, if you're talking about, let's stick with the landscape, if you will, where we're talking about trees, shrubs, all of those things going through the roof. Why? Because of the demand for the building. A lot of what's going on here is we're seeing a lot of home builders now start to really gear their communities towards the millennials. Millennials don't really like to own, apparently. So these communities are building up and they are rent. They aren't rent owned. They aren't even you go in there and buy it. They are all rentals. So that type of community is really driving the new or the millennial, so that the new construction is really going towards that. And these little communities look like little resorts. So a lot of infrastructure going into these. So That is something we're seeing driving prices higher here as well. A little bit of a side note there. So I forgot, I got the crude oil up there. All right, so now we got bonds. Bonds are going to be creeping higher here a little bit with interest rates starting to look like they're going to be suppressed. Well, I think that this is a bit of a wrong move here. The way that the inflation numbers are coming in, I've been saying the Fed is going to have to hold off because of the employment mandate. Well, a lot of folks are talking about this employment as being not a big deal. The fact that there's a lot of folks out there that are falling up. They're in the past, we've called them discouraged workers. And what that is you've been looking for a job for a long time and you get discouraged looking for that job. You've been on unemployment. When you stop filing for unemployment, you become a discouraged worker. So you aren't looking anymore. You aren't on the unemployment data point because you're not looking. You're just off of that data point. So you can see that these interest or the unemployment rate could dip while we're seeing all of this other stuff going on, people not getting hired. So bonds making a move to the upside. What I'm trying to get to here, folks, is I think that the taper is going to happen a little bit sooner than even I expected. I expected the taper to start happening maybe going into the summer, but this is starting to ramp up a little bit sooner, and we're going to move this paradigm forward a little bit. So I'm thinking the taper is probably going to happen relatively close to the start of 2023, and that would allow, meaning stop the buying pressure here in the bonds and allow that bond to start falling. That means interest rates are going higher there going forward. Gold prices stuck right there at the point of control. Not really a whole lot to see there. Bitcoin finding a bit of a bottom here right at the value area high. You know, I've been talking, remember we went back and forth with a couple of folks. Well, is that value area high going to act as a support? Well, we can see that there for the 3-year, it is acting as support. Finding some consolidation right here at this little node here in and around $50,000. Not really surprising. That's just a psychological number everybody's been talking about since it was trading like 1,000. So 50,000 is really stuck in folks' minds. And I think that that is going to be a psychological level that we could probably take a little bit of a pause here going into the new year right there for Bitcoin. Now, VIX is coming off. Why? Well, you know, some folks are saying this is good news. Well, I don't really see it there, but we are starting to make a move and erasing some of these topping patterns that we had going on the last couple of days. The Dow Jones Industrial Average here, you can see when we get these back-to-backs, it starts making it look like it's going to be a continuation. And I believe that that's what we're kind of starting to see here in this Dow Jones Industrial Average, that it becomes a continuation pattern. Hey, Mark, what do you got going on? Eric, think that IWM will ever break out of its 8-month consolidation? My goodness, enough is enough. That is a great question, Mark. Let's take a look at IWM here in a second. I'll throw it up here. I don't really care, right? IWM, let's take a look at it. It has been consolidating. Oh my God, I haven't looked at IWM in a while, and it was basically a few months ago, and it was stuck in this range. We're still there. One of the things I could only say here, Mark, with IWM is to be looking at this as a swing trade. You can see that I've got a couple of different lines that don't necessarily line up with the previous Fibonacci's. It has broken above my old Fibonacci's. I probably should adjust those a little bit, but something to note here is right here at this 211. That's a level that I have found as a nice support level, probably trumping this 214 area. But one of the things that I talk about is, you know, with like IBM has been stuck in a trading range for ever since I've been trading in college, so some 30 years. What I would suggest is you just play off of these lines. You know, you could play the bullish moves and the bearish moves. Right now, it's right in between. So I'd probably hold off a little bit, maybe even throw a butterfly on around this, expecting it to stay within these range. But you're right, IWM does seem pretty boring, but you know, I've made my life off of boring stocks like this with similar to IBM when they're trading sideways. I love it when they get pinned in between two support and resistance level, and you can just play off of those lines. Now, if you have a lower risk tolerant trading profile, then I would say when you get it down and it tags onto my little line here, when it reaches back up into the Fibonacci is kind of where a lower risk tolerant person would probably take advantage of once it gets confirmed going back in off these beautiful candles. Probably should be using this as an example for my swing trade type setups. But that was a great one. Thank you, Mark. That I would be playing off of those channels there. Not really a whole lot to see here. Yesterday in the NASDAQ, we did get a confirmation of this topping pattern I was talking about. Today, getting a bit of a bounce. I was expecting us to filter through and come down and at least tag this upward trend line. And if we break that, I know that we're going to probably come down here and test this neckline here in the NASDAQ. So that's what I'm looking for. Risk being to the downside for the longer duration because of these head and shoulders setups that we've got going on here. If you guys want to see this a little bit, this one's a little bit fuzzy. So let's pull this one up and I'll draw it in there. Show this head and shoulders where it's coming in. I don't know where those lines go. Oh, it's from yesterday. Sorry, let me just erase that then. Garbage that. All right, so let's go back to the head and shoulders. This is where I was coming up with the head and shoulders here. Is you got your left shoulder, your head, and building out a right shoulder here with a neckline. Now, this one's not nearly as obvious as the last one in the NASDAQ. Let me pull that back up just to, where is it? I think I see a question popping up. Let me see. Oh, you're welcome, Mark. Appreciate you. So this was a little bit more of a dramatic head and shoulders, or a little bit more obvious, I should say. It's still hard to peel out some of these sometimes, I understand, but there's a left shoulder. We got our head with our other shoulder building out. So usually what we expect is that shoulder to move down, at least tag the neckline. Another is that we would have this measured move between here, and that would drop that down to something like that, if you will. So another measured move to the downside if we start really breaking down. So a couple of areas to look for. I at least think it's going to come down and hit this trend channel, but possibly even that neckline, as we can see here, a nice neckline in the E-mini S&Ps. Now, here's what we're seeing right before the open here is the market is making a move to the upside. What's this spike all about? Well, it's off of that CPI, which is a little bit bizarre to me. I don't think we should be reacting like that with these inflation, because why? The Fed is going to be looking to raise interest rates sooner than later. That would make us think that there was going to be a taper tantrum, right? Well, we've been talking about taper tantrum for a while now. Well, are we coming to that point, or have we talked about it enough that the market has kind of just forgotten about that type of situation? So that is what it is. And then we're talking about Netflix. Talked about this yesterday in the webinar where we were talking about the ratio put spread. Thank you guys all for showing up. There was a ton of people out there. You guys had a lot of questions. I love that because you guys are driving the content. So throw over there in the comment section if you have anything you want me to cover before I go. Otherwise, I'll have to circle back around to see if you guys have any questions. But today, getting confirmation to the downside, like I said, in this trade, I'm looking for a retest of this bit of a tweezer. We've got a bottom here and a top here that lines up right around with 590-ish. So that's what I'm looking for to define to create this strategy with. I was looking at the 630 to 590 in that webinar, and you can see that we're starting to pull back. I show you all those guidelines in that video. One of the major ones is when we're doing this ratio call spread or the ratio put spread, that we do not ever do this for a debit, folks. You can build this out several different ways, but one of the real things that you need to take away from these ratio spreads is the fact that you need to do them for a credit. There's no reason to add risk to one side of a trade and not have the benefit offset on the other side of the trade. Don't add risk while you still have risk, in a sense. So that's what I try to convey to you folks in that video. So please check that out at protraderstrategies.com. And before you go over there at YouTube, make sure you hit the subscribe button so you get notification on these videos when we're doing them. Hey, and there's a little bell there that most people really don't know about. Check that out, because what that does is it'll give you a notification when I'm popping in unannounced. Throughout the week, don't really have a scheduled time for these videos. It's really when I find something to talk about, I need to share it with you in the immediacy. So please take advantage of that as well. All right, that's all I got for you guys. Finally, have a great weekend. And if you can't take that, take it easy.